What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with SPY, Tesla, and the overall markets. I'm going to break down some very key levels to watch for and then do a cycle analysis with these levels. Just know that I'm not a financial planner, so take nothing I'm saying as financial advice. And also, if you guys can, please check out my Moomoo link. If you deposit $100, you're guaranteed 5 free stocks. If you deposit $2,000, you're guaranteed 30 in total, not to mention 8.1% APY on uninvested cash. The offer ends at the end of March. Anyways, let's talk about what's happening with this market. So, as far as SPY is going, as you guys can tell, we have different phases. There's phases where we're in a bullish period, we're in a bearish period, and we kind of like fluctuate through those. And you can actually encompass this price action through cycles. These cycles are not going to be perfect because it's just based off equivalent distances. But if you try to change it up, you could come up with like better looking features. I'm just trying to do this in a very simple manner to make it clear to understand how we're looking. So to start things off, right, the market entered a period of risk around that December period where we started to see this big sell-off. That was after the FOMC meeting. And then even starting off January of 2025, we did see a sell-off. We tried a recovery move as we got close to mid-February, but then we just continued to collapse as we got close to March. So for the time being, right, we entered this like very weak cycle. We just continued to fall over and over again. And as this continued, there's no sign that we're truly out of the cycle yet because we're still in this very big bearish phase. Now, one thing I've mentioned is that using our fib levels, we've calculated that there's a very good chance SPY will visit 535 to 540. I could see us actually decline all the way down there. With the reciprocal tariffs coming, President Trump is going to be announcing them as soon as April 2nd. He's declaring it a liberation day for the United States, in his opinion. That could be a big factor causing volatility, not to mention the Fed, because there's going to be a risk of higher inflation, according to Jerome Powell. And also, even President Trump has mentioned there's going to be a disruption. President Trump does not believe we're going to enter a recession. Jerome Powell doesn't think so either. At least he claims that, right? But the thing is, some economists have calculated there's about a 40% chance we will enter one, given the current interest rates and the way in which our economy is responding with the risks to like higher unemployment with more layoffs, and then simultaneously higher inflationary risks, and then the other factors out there that are affecting retail spending. So consumer spending is slowing, but simultaneously we still have that risk of higher inflation, possibly due to the tariffs and other factors. There's a lot of factors involved in that, which is what Jerome Powell was speaking about during the FOMC meeting. So there are some short-term risks, and there are going to be recessionary fears that re-enter, especially because our GDP estimates have been going down. So when the GDP estimates go down, it kind of shows that our overall output could be slowing, at least to some extent. And we'll see what the economic effects of that happen to be. But for now, how is this going to affect the market? So the market is driven by sentiment. And for now, we're seeing sentiment kind of alleviating right now. It used to be extremely fearful. It's a little bit less fearful than before. But overall, we tend to kind of encompass sentiment through these cycles. So we had a good period. Let me just fix this for 1 second. Sorry about that, guys. We had a really good period where we not only entered this volatile market, but we saw these periods where we pushed a little bit, then we started to slow down as time had progressed. And we were in a very bullish phase for the majority of the second half of last year, right? Very bullish phase overall, despite this sell-off right here. We just continued to uptrend for many months. And one could argue that, the bearish cycle either started as soon as like December, if not as soon as February, whichever one you want to prefer. And we're still in this cycle. You can actually kind of see it right here. We're still in this bearish phase. And I don't think we're out of it just yet. I think that's the main thing this is basically showing us. We're seeing temporary relief. So very close to when we hit this mark, that's when like we came close to our bottom before the relief move came. So from how I see things, it really depends on what the reaction is. If we could break 5, 6, 8 on SPY, then yes, it's possible we just try to continue to uptrend for another week or so up until we get the reciprocal tariffs. I would love it if we could get back to like close to 580. That would be a very good opportunity, because as time progresses, we will eventually see another phase like this where we retest of the 540 to 535 area. There's going to be another test of that before we enter another recovery move. And I think that that would be the case in which we enter a bear market, which is very possible given the risks right now, right? It's very, very possible. A period that was very similar to this would be back in like 2018, for example, if you actually go back to the charts. So if we go back to like 2018, there was a risk of higher interest rates, and there was also risk of inflation, and we had tariffs, right? We started off the year on a low end. SPY went from basically 286 all the way down to 254. So it was around like, it wasn't as big of a drop as what we're getting now, but we did see a bit of a sell off. We made a nice recovery move. Then we got this massive sell off towards the end of the year during that period from 292 all the way down to about 234. So very significant drop over there. So that's, that was tough, of course, but just keep in mind it didn't last as long as many people were thinking, right? We ended up making a full recovery after a couple of months. So in our stock market, at least today, obviously the circumstances are a bit different with the recessionary risks. But my main point is that no matter what happens, we will eventually recover. Every time in history we do recover, whether it takes many months or a year, we will eventually recover. So the question is, will we enter bear market territory? We're not officially in one, and we're going to be watching to see what this next cycle brings us. So I do think we have another bullish phase that kind of remains here. We could try to continue it up until the end of March, and then heading into that April period when we have the reciprocal tariffs, more recessionary risks, higher inflation, that could cause another leg down. And I do have a target of like 535 to 540 on SPY. I did make another video about that previously using fib levels and other techniques, but I'm not going to go over every single technique in this video because I want to make this one kind of short. On the QQQ, we have a very similar cycle. So, we had periods where, if you guys look at this example, there were cycles where the QQQ was very bullish. Like this phase right here was bullish. This phase right here was bullish. This one was also very, very bullish. It remained in very, very bullish phases for many, many of these cycles, right? Over and over again. And then we had other cycles where we were kind of in the middle, like right here. This is a little bit more bearish. We kind of saw the sell off move. We were in a very bearish cycle to start things off. And then we were pretty much just sideways. We were trading sideways for like, I would say like these past three cycles over here until we got this very bearish move down here during this, cycle. So on the QQQ, this cycle kind of shows that approaching this like April period, okay, as we get very, very close to it, there's going to be another period of risk. So as we get close to those reciprocal tariffs, we're just about a week away from the end of this cycle, by the way. We'll see if the QQQ holds up. Can we get one more recovery move? It's a possibility if we could break 485 or so. But then, like I said before, there's going to be another period of risk of us potentially retesting or even breaking our lows as we get towards the end of April. And the reason for that is because of, the recessionary fears, higher inflation, the fears about what, all the tariff fears that come out. You guys remember what happened just a couple of weeks ago when President Trump was announcing the tariffs and there was so much chaos. The market just collapsed. So it's just a temporary move, right? And President Trump and his administration mentioned they're not really watching the stock market. They're okay with causing short-term pain, but they believe that it's going to be worth it because the long term is going to be very prosperous, right? That's what their view is. So with that being said, there is a very, very good chance we could return to like the 450s on the QQQ. It's very possible we see another cycle like this before we see, an attempt to balance as we get closer to summer. But I'm just trying to tell you guys that for the short term, it's possible we kind of trade sides. We even try to push a little bit more as we get close to April. We could see another attempt to pump. It would be a blessing if we get back to 490. That would be a very, very big opportunity. No guarantees we go that high, but I could see us attempt to get close to it. On SPY, the same thing could happen. We could attempt to get back up to. It depends if we could break past 570. If we hold it, I'm looking for that 575 to 580 area, very close to our 200 EMA. And then we'll see if we turn again with the next reciprocal tariffs coming, or even maybe after, we get more inflationary readings. So you want to be very, very careful with all of this coming out. And then for a stock like Tesla, I don't think Tesla's fully bottomed yet. I wouldn't be surprised if Tesla is attempting to pump a little bit. see a temporary, bullish phase, maybe through the middle of this cycle, heading into like April, we could attempt some kind of a, push before we enter another bearish phase right over here. So it depends on how well Tesla breaks out of this. Can we slowly rally to like, the 260s, if not the 270 area, then we start to decline maybe halfway into this cycle. And we could see another leg down. Typically, Tesla bottoms in like the April to May period, at least historically. So if we lose this low at 215, I'll be looking for like the 200s to 180s, maybe during the reciprocal tariffs that affects Tesla. And once we bottom, I would argue that you shouldn't just hope we dump to like 180 to start buying. I prefer to just dollar cost average. So around 200, 215, I'd be like buying already. And then if it goes lower, my next buy zone would be like 180, then 150. Dollar cost averaging is a good technique for the long term because you never know how low it's going to go. But this is just another hypothetical example of what could happen. I calculated like the 180 area based off our gaps and such in my previous videos already. So I'm not going to go over all the calculations, but then that could be when Tesla eventually bottoms and we see a big rally for about 1 to 2 months approaching the launch of their very, very important unsupervised FSD launch in Texas. So we could be entering a period like this, just hypothetically, right? But like I said before, we're going to take this one day at a time just to see how things end up going. But I'm just here to give you guys a very, very good analysis of how this could end up perpetuating. Anyways, I want to make this video very short and simple. My main point is that I don't think the downside for the market is over yet. We could be entering a temporary bullish period. We did call out the bounce that already came to SPY. Also for the QQQ. So we did call this move already. We're actually bouncing a bit, but my argument is that we're not done yet with the downside. So it's just going to be a temporary move up before we see another leg down once we get to April. So that's kind of like what my view is just for the time being. We could see another week or so of, green, some more interesting price action before things start to go south again. So I'm just here to give you guys a warning about that. And as you see good deals, you don't want to just hope we go lower. You just want to start dollar cost averaging. That's the best strategy for like Nvidia, Tesla, and these big tech stocks. Not financial advice when I say that, but I'm just here to give you guys some very, very useful free information. Anyways, that's it for my video. Thank you all so much for listening. Have a good rest of your day. I'll be back with another upload tomorrow. Until then, take care and peace out.